How many trading strategies have you tried? How many indicators have you added to your charts? And how many times have you thought to yourself, this strategy doesn't work? But have you asked the real difficult question, which is, what if it's not the strategy at all? What if it's the person who's executing the strategy that has the problem? So there is something called the strategy hopping trap, which is where you get a losing trade and you think, oh, maybe this strategy is not good. And then you get 3 losing trades and you think, oh, I think I'm going to train strategies. You see someone on YouTube making lots of money with a different strategy and you think, oh, maybe that's the one for me. You add loads of indicators to your strategy and the bottom line is you're not actually giving that strategy time to work in the first place. You see, the thing is about a strategy, it's not tested over 1 trade, 3 trades, or potentially even 20 trades. It needs to be tested over a prolonged period of time so that it can actually see if that strategy does work or not. And if it works over a prolonged period of time, then it works. But if it doesn't work over 3 trades, that doesn't mean that it doesn't work. But this is the problem. People don't have the patience. So they hop from strategy to strategy, never actually just giving it the time. And that's what I mean when I say, is it the strategy that's the problem, or is it the person executing the strategy that's the problem? If you're doing that, then it's you that's the problem, not the strategy. You see, the psychology around trading is actually really, really interesting. So most traders know what they shouldn't be doing. They know that they shouldn't move their stop loss, but they move their stop loss. They know that they shouldn't revenge trade, but they revenge trade. They know that they should only take the trade when the setup is exactly right, but they see the candles moving and they just want to get in. And it's really interesting psychology, isn't it? Because you can have the perfect setup. You can have the exactly correct risk. You can have the exact risk to reward ratio. You can enter at the exact place that you're supposed to enter. You cannot revenge trade. You can do everything perfectly and you can still lose a trade. And that's a really, really difficult thing for the human brain to get hold of, because actually you've lost a trade even though you've done everything perfectly. And when you start, you've probably lost trades when you haven't done things perfectly. And you kind of think, if I do things perfectly, then it'll be perfect and it'll all work. But trading doesn't work like that. Trading says that if you do everything perfectly, you'll win 70, maybe even 80, 85% of the time, but you won't win every trade. And as I said, when you start, your brain goes, well, that's not right. And it just flips you into that sort of, I'll just do that. I'll change my stop. I'll chase another trade or revenge trade. Oh, look at those candles. I'll just get in now. But you know that that's not what you should be doing. You see, there's such a thing as a good loss and a bad loss. So a good loss is you get your setup exactly correct. You get your stop loss exactly correct. Your lot size is exactly correct. You enter in exactly the right place, but the trade goes wrong way anyway. That's trading. That's the way it goes. But that is a good loss because you've done everything correctly. A bad loss is you chase your stop loss, you move your stop loss, you revenge trade, your setup isn't correct, and it all goes pear-shaped. That's a bad trade. That is a bad loss. You see, a losing trade isn't necessarily a mistake. But breaking your rules is a huge mistake, and you should never do that. And that's the difference between a professional trader and an amateur trader. And here's a funny thing. So it isn't necessarily losing that takes you out of the market and takes you out of the game. Winning is just as dangerous, because if you get 3 winning trades on the bounce, you think, I've got this. And you increase your lot size and you reduce your risk and you don't enter your setup correctly because you're overconfident, and the market comes and just shows you who's boss and takes you out, and your confidence is gone, your pot's gone, and you've had it, you're out of the game, and you think this trading game is not for me. And that happens to a lot of traders. Losing makes you stronger, winning makes you weaker. The other thing is, too many people judge how well they're doing on what's going on in their pot. Is it growing or is it shrinking? And that's very dangerous. You should be judging how well you're doing on how well you are executing your trades. Did you go in at the right place? Was your setup correct? Was your profit and loss margin, your risk reward correct? Was your stop loss in the right place? Did you exit the trade early because you were in profit or not? Did you revenge trade? And if the answer to all those is, I did it exactly correct, then you're winning. It's irrelevant what your pot size shows. Too many people look at their pot size and go, I'm winning. Where actually, are you growing psychologically as a trader, or is your pot just growing? Because if your pot's just growing and you're not growing psychologically, your pot will go at one point, and then where are you? Maybe you don't need another strategy. Maybe you don't need another mentor. Maybe you don't need another indicator. Maybe you've got the perfect strategy. You just need to execute it perfectly over a prolonged period of time and say, I've got it, I've nailed it, that's what's right. But it's executing it perfectly. Can you do it or not? Remember, trading isn't about winning every trade. It's about becoming a better trader than you were yesterday.